Afternoon, friends. Today I have an update as in regards to an article which talks about the foreign institutional investors increasing their stake in three companies by about 8%. So, this information relates to Cartrade Tech Ltd, which is a multi-channel auto platform provider company which covers and presence across vehicle types and value-added services. The company operates various brands such as CarWale, CarTrade, Shriram Automall, BikeWale, CarTradeExchange, Adroit Auto, AutoBiz. Looking at the latest shareholding patterns, the FIIs have increased the stake in Cartrade Tech Ltd by 5.84%. Uh, Previously, it was 55.12%. Now, currently stands at 60.96%. The second company or the second stock is Dhanlakshmi Bank. It's into banking services. It's a small scale private sector headquarter in Thrissur. The bank is tech-savvy and deploy technology widely as an instrument to enhance the quality of customer service. Looking at the latest shareholding pattern, the FI have increased their stake by 8.31%. It was formerly at 6.95%, and currently it is at 15.26%. And the third company or the third stock that we're talking about is Aptus Value Housing Finance India Limited. I'm sure most of us haven't heard about this company. Let us look at some details. Aptus has been formed to primarily address the housing finance need of self-employed low and middle income families, primarily from the semi-urban and rural areas. The company targets first-time home buyers where collateral is self-occupied residential property. Looking at the latest shareholding pattern, the FII has increased its stake in Aptus Value Housing Finance by 5.88%, from 21.86% to 27.74%. So, an important disclaimer, friends, all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. The view do not reflect any personal opinion or advice. Stock or market investments carry inherent risk of financial losses. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended uh, that you consult a qualified financial advisor before making any investment decisions. So we'll go through some details. You can see car tech trade is down 1.18% today. Over the last 5 days, down about 1.5%. Then over the last 1 month, it has made about 15% gain, which is an excellent performance, I can say. Then over the last 6 months, companies given a return of 40%, which is exceptional. And over the last 1 year, you see that the companies rallied 100%, which is very strong impact that the FIIs have put into the stock by making those investments. So you make the stock a steady in terms of valuation, in terms of volume volatility as well. So this is the brand or the logo of the company, Car Tech Trade. It's a multi-channel auto platform provider with coverage and presence across various types of value-added services. We've been through most of this information. Then you can see high of 1,889, stock PE of 71, which is pretty high, book value of 449, ROC 4.2. So it's mostly to do with value-added services. So there's not much of a high need of investment. However, if the company is having physical stock in assets, as in inventory, as in certain specific cars, then it would be that the return on equity is low. I believe we'll have to look at the overall capital of the company, which should give us a better idea of whether the company is actually investing in inventory. Stock has almost debt-free. Company is expected to good quarter results. The stock is trading at 3.85 times book value. Company is not paying any dividend. Company has low return on equity of minus 1.36% over the last 3 years. Earnings include another income of 67 crores. Then you get the sales 145, 150 crores on an average. December quarter there was about a 15 12% increase in the revenue from 154 crores to 176 crores, which is almost 15%. Then you can see operating profit of 50 crores, and you can see net profit from 31 crores to jump to 46 crores from September to December quarter. Prior to June to September also it advanced from 23 crores to 31 crores, which means that the company is doing well. The financial module or the business module of the company is doing well, and the company is able to generate revenue and profits out of it. So you can see here sales show 176 odd crores and the expenses relate to 126 crores, which would seem more to do with marketing expenses, possibly operating expenses, possibly. Let's look at some other details. You can see the year-on-year figure increase from 313 crores to 364, and from 364 to 490, and the current last 12 month trend shows 617 crores as the revenue, which is a good substantial amount. Then from a minus 120 crores, the company has reached a positive 124 crores profit in the last 4 years. See the earnings per share, which was minus 28 at FY22, today is about 24 in FY25. Then you can see sales growth of 40%, profit growth of 78%, then stock price growth of 112%, and return on equity is almost zero. So then let's look at FIIs. You have 61% holding, DIIs you have 15% holding, and public 23% holding. So overall you can see public holding is still relatively high, which could still cause some volatility in the stock. However, with the increase of 5%, 5.8% holding by the FIIs, the company becomes a very strong model for future growth, possibly from a 3 to 5 year time perspective, and the kind of brands that the company offers. It would definitely be a good value addition, especially with the services that it provides online, and the kind of other uh, aspects of business that it can explore based on that portfolio and platform, which should be substantial. Then we'll look at the Dhanlakshmi Bank. Current traded price of 27 rupees. You can see overall 4% down in the last 5 days, 5% in the last 1 month, 5.3% in the last 6 months. So if you calculate the market drop, or the negative impact of the stock market following in the month of October last year, you see the company has lost only 5% value in the last 6 months, which shows that the financials are strong and the sentiment by the public towards the stock is good. That is probably one of the reasons why the foreign institutional investors have invested in this stock, and that is the reason why it hasn't had so much of volatility. Look at the last 1 year. Yes, you can see overall in the last 1 year it is at a negative of minus 20%, which I believe the company would be able to easily uh, recover and recoup very soon. You can see revenue grown 25% year on year, net income 557 up year on year, diluted NPS of 550%, then net profit margin improved for 417%. So overall 12% improvement in the December quarter. This is the logo of the bank. 1063 is the uh, Market cap high of 38 rupees, stock PE of 26, which is slightly high. Book value 27. Return on equity is about 5.8%, which is a bit low compared to the assets that the bank would employ in the business. Ideally, anything above 10, 12 would be a good return on the assets and equity. So the company possibly is not performing that well. Company is not paying out any dividend, low interest coverage ratio, poor sales growth of 4% in the last 5 years, low return on equity again, as I just spoke of, 5% in the last 3 years, contingent liabilities of 970 crores, 74 crores, which is a sort of a concern. Company is capitalizing the interest cost. You can see here slight marginal increase in revenue between the two quarters. Overall, about 10% increase in revenue in the last 9 months. You can say about last 1 year. You can say. Then you can see the profit for the September quarter was 33 crores. December quarter profit is 20 crores. It was minus 8 crores in the month of June, or the quarter ending June FY25. So it's been a little bit of a fluctuation up and down, which would impact the overall performance and the sentiment of the public towards the stock. And you can see here year on year little improvement in the revenue, which doesn't really help the company too much. Overall, between the last 3 years, the net revenue or the net profit has fallen. You can see from a positive 36 went to 49, from 49 it went to 58, and it dropped down to 41 in the last 12 months. So looking at that trend, doesn't seem that the 41 crores would change drastically in any way. So it is going to create a negative impact on the stock price based on the last year's performance. Then let us look at sales growth 9%, profit growth of minus 56%, which itself tells you that the company has had a bad 12 months. Stock price minus 20%, return on equity last year 6%, which is quite poor. FIIs have increased their stake by about 8%, which is the good positive sign that could drive the stock price high. However, the biggest negative sentiment or the drawback this stock could have is the high public holding of 85%. So here, the in terms of price and the oversold zone can be quickly reached with such a high holding of the public of 85%. Let us look at the housing finance third company, which is Aptus. You can see the price about 318 rupees, 0.5% growth in the last 5 days, 8% growth in the last 1 month, minus 7% last 6 months, and this seems to be fairly good. Not really that badly affected due to the market correction in October last year. You can see the company is only negative of 1% in the last 20, which is seemingly a good position to be in. This is the logo of the company. EPS missed as per earnings call by 0.33%. That was for the last quarter. So this is something that the market would keep a track and watch of. The F4 F sorry Q4 FY25 results, that is going to be important. Then you look at what does it do. Housing finance need of self-employed, low and middle income families, primarily from semi-urban and rural areas. Then you can see high of 102, book value of 86, stock to earnings of 21, which seems to be decent. Dividend yield 1.41%. Return on equity about 18%, which is good compared to the market average of 13, 12, 13, maybe even 10 to 11. Ideally the larger private banks have a range of 14 to 15%, some have 18%. The stock is trading at 3.75 times book value. Promoter holding decreased by 9% in the last 3 years, good profit growth of 29% in the last 5 years, healthy dividend payout of 28%, which is good. Then you can see overall gradual growth in revenue over the last 1 year. Then look at net profit gradually growing over the last 1 year as well, so it's a good sign. Then looking at the year-on-year performance, yeah, it's been on a growing trend, about 25% each year, which is a good sign. And the same with terms of net profit growth of 25% year on year for the last 4 years, which is a steady growth and which creates a good positive sentiment for the company to do well, which is something that you should keep in mind. Please consult a financial stockbroker and see if it is advisable and the expert advice gives you the go ahead and invest in the stock or keep your holding intact or ideally exit from the portfolio based on the opinion you get. So sales growth 28%, profit growth 23%, minus 2% on the stock price, which is amazing. Return on equity average is 17% in the last 5 years, which is good. Equity capital 100 crores. Reserves have increased by about 550 crores in the last 1 year, which is great. Borrowings have also increased. So yes, the company may be borrowing to offer the same across to its client or customers. So that is the reason why you have a high borrowing. But again, that should reflect as a part of your revenue. If your borrowing is at 6,000 something crores, your revenue is about 1,700 crores per year. You times that 4, that means whatever borrowing that the company has is times 4 of the net revenue that is able to generate. So overall seems to be in a good situation. And let us look at it further. Shareholding of 53%, FIIs 28%, and public and DIs at 9 and 8%. So this is overall good sentiment for the company to work with. That is it, friends, today. Please connect with another video soon, maybe in a day or two. Please like, comment, and share, and please share this with your friends, family, and associates so that they could benefit from this information as well. Thank you for watching. We'll connect soon.